Gold prices are on fire, breaking through the $2,500 mark. For those of you waiting for a pullback on gold prices to buy or to start accumulating gold as part of your wealth preservation strategy, well, I'm here to tell you, you might not get that pullback. There's no time better than now to start your game plan and strategies surrounding gold and silver investing. That's why it's critical that you make an appointment with us at ITM Trading. You can easily do so. There's a link below in the video description where you can book a Calendly with one of my colleagues, and they will do all the work for you. They're gonna talk you through and walk you through a wealth preservation strategy centered around owning physical gold and silver. Do not waste any more time. Gold's just gonna keep skyrocketing here. On that note, let's get to today's video. Hi, it's Daniela Cambone. Welcome back to the Daniela Cambone Show here on ITM Trading. Joined today by someone who I hope will help us make sense of everything happening in the markets right now. I know I'm confused and need answers. So please welcome back to the show, Bert Dohmen. He's the founder of Dohmen Capital Research and his newsletter, loved by so many because he's known for giving his often contrarian but accurate forecasts on the markets, the economy, and the Federal Reserve policy. Bert, always good to be with you. Welcome back.
Thank you very much, Danielle. It's always so much of a pleasure to see your beautiful face.
Thank you, Bert. Very happy to see you as well. And I really hope you can help guide us here. Let's start with the Fed. I read with great interest your recent penning where you say Fed rate cuts, right? It's all the talk with Jackson Hole happening as we speak now, and Powell's apparently going to give us a roadmap of what we should be expecting from cuts. But you say suddenly the talk in the media has shifted from discussions of whether the Fed will cut rates in September to whether we'll see that cut of 0.50 points. How fast things change, you say. Tell us what you're expecting from the Fed and how pivotal is it?
It's overblown. Rate cuts traditionally has been a sign for the market to really accelerate the downturn. So I think that would be an official acknowledgement that we have been in a recession. Everybody claims we're not in a recession. I've been saying for the last year, we are in a recession. The leading economic indicators came out this week. They were down now for 24 months. They've been going down every month. Every month, the leading economic indicators are down. And now the charts tell us that all of the stimulus, which is from 7 to maybe $9 billion, is used up. People got that money. Many people said, oh, I don't have to work anymore. I got all the stimulus money from Washington, and suddenly they have spent it all. So then the next phase for people is to go to their credit card, take out their credit card loans. So now we have an all-time new high, it's over $1 trillion, 1.14 trillion of credit card debt, money that people have borrowed against their credit card. And they're paying maybe a 25% interest rate. When you pay 25% interest, it's a prescription for bankruptcy. There's just no way you can pay 25% interest and stay alive, So this is the next phase. And people have run out of money. So now, but they still didn't want to work. The employment numbers really tell me that. And I don't use the official numbers published by the BLS. I call it the Bureau of Labor, the lying statistics, because they lie with their statistics. And I don't listen to those at all. I go to their website. On their website, they have to be more honest. So the headline number that you see on TV is always false, They publish the false numbers in inflation, in all the important metrics. You don't pay attention to the headline numbers, look behind the numbers, and you can really get the accurate information if you spend about 15 minutes on the BLS website. That is important. People should take 15 minutes of their life to look at what their future looks like. But people don't want to do that. They rather go to a baseball game or a football game or whatever, and that's really worthwhile doing it.
So 2 points, you bring up 2 points. One, let's play out the scenario that, let's even play out the scenario that there's a 50 basis point cut in September and more cuts leading up to the end of the year. Should we be doing anything differently given that information as an investor?
Yes, I think right now, I wrote that last month. I said the bear market is now starting underneath the surface. Okay, bear markets always start ahead of the actual visible numbers. So we wrote in July there's going to be a big downturn in the market in the second half of July, which then we got with the yen carry trade. We didn't know it was going to be a carry trade, but it happened. And then it's going to be that last hurrah rally in August. And the last hurrah is where they suck in all of the reluctant bulls into the market. Everybody gets very euphorious. I use that word. It's interesting. He's a very good analyst that I respect for many, many years. He used that same word recently, I think 2 days ago, on the euphoria. So we're really reaching now the euphoria stage. And I predicted that this is how this whole thing is going to end. Euphoria. Everybody's going to get very bullish. And it would probably be a good trigger is the NVIDIA earnings when they come out this week. And so then you have to really have a good strategy to make money in the bear market. We have made money for our valued subscribers in every bear market in 48 years of existence of my firm. So that is important. It is much easier to make money in the down market because stocks and these investments go down much faster than they go up. Have you ever noticed that?
Yes, I have. And in fact, it makes a lot of sense that, like you said, they suck you in, they get you bullish again, and then are going to hit you again, right?
Yes, that's exactly how it's done. It's a game. It's a game.
You mentioned the yen carry trade, right? And a lot of folks emailed me saying, this is the new buzzword in media. Everyone was talking about it. It was a brutal force crushing markets. And the question is it going to come back and unwind even more? I guess your answer is yes.
Yes, I think that was Monday, August 5th. That was the first massive selling, and I said this is a maximum selling that we're going to see for a little while, but it won't be the final thing. There's going to be a rerun of that. Let me just explain the yen carry trade, which I also did in our Wellington letter in our trading service. We also have trading service for shorter term oriented people. The yen carry trade was so attractive for all of the big hedge funds and the big players in the markets because they would borrow yen and they had a 0% interest rates in Japan, which is by the wisdom of their central bank. The central bank bankers, the head guys always change. They always get thrown out when something goes wrong. Then they get a new one who again makes the same mistakes. I mean, when you consider Japan, the government owns via ETFs over 70% of all the stocks listed in Japan are owned by the government via ETFs. It's ridiculous what they're doing over there with monetary policy. And they've been doing that since 1980 when their markets crashed, So that's a long time to do all this manipulation. But anyway, the hedge funds would borrow yen at 0% and convert them to US dollars, and then they would make a positive carry. Then they would invest it in U.S. Treasuries, and on T-bonds they might make 4.5% interest. So they pay zero interest, they make 4.5%. That's an infinite positive carry, as it's called. So it's the easiest way to make money. You have to be an idiot not to make money in that trade.
Bert, let me ask you,
But
because
then what
obviously,
happens, Danielle, excuse me for interrupting. I'm sorry, I
please.
didn't finish that thought. But then when the yen interest rates started rising, because the central bank in Japan made the decision to let interest rates rise, then of course the cost of the money on that trade, which was done maybe with 100 or 200 or 300 to one leverage, huge leverage. So they let interest rates rise, and suddenly, wow, your cost of money is getting higher, and so on. And pretty soon, the losses on your positions are higher than the equity you have in it. And pretty soon, with that kind of leverage, you're going broke. And that is a danger with the carry trade. You're going to go broke. You're going to lose everything you have in there and much more. And then you're going to get margin calls that you cannot meet. If you're an individual, they go after your house. Most people don't even know that. If they have a margin account, they can lose their house. If they get a
Wow.
margin call, they can't meet. I had a discussion at lunch that was in 1987, a few days after the 87 crash, when the Dow went down 22% one day. And he came to the city where we had our office, and we had lunch. And he said, "Oh, I'm going around the country foreclosing on houses." And I said, "Foreclosing on houses? I didn't even know you were in real estate." He said, "Well, we're not, but we're foreclosing on margin calls."
Right.
I could not believe it. That was
Awesome.
incredible.
Yeah.
Yeah.
Well, let me ask you this then, Bert. Obviously, you're seeing the all-time highs happening in gold. Do you find this telling, right? What can we read between the lines here of what it's saying about gold and what it's saying about the dollar?
Yeah. What now in my work, it shows that the big smart money is going for gold as the ultimate safe haven. Okay. And that is really important because they already think ahead. They say, okay, if everything is going to start crumbling and so on, then the Federal Reserve will have to come to the rescue, and they will create maybe another 10 or 20 trillion dollars in artificial money. The Federal Reserve does that with a computer. They used to have to print the money. They don't have to print money anymore. Now it's all done with computer. It's just a guy with a keyboard, and he can create $10 trillion very, very quickly. So that's what they're anticipating now. So, and we all know by history, Zimbabwe and Venezuela and Argentina, what happens when they increase the money supply by such huge amounts. The currency value goes down. But the United States has an advantage. And so the people that think that the U.S. dollar is going to go to zero, I think they're going to be wrong, because the U.S. dollar is still the strongest currency in the world, except for the Swiss franc. But it's the reserve currency of the world. It has been for at least 100 years. So that's really important. The other currencies are going to go down faster. They're all going to go down in purchasing power because all the central banks are in the same fix. Yeah, but the US dollar is going to go down slower. And that is, I think, what so many analysts miss. They talk about the end of the US dollar, and the BRICS countries are going to have their own currency and so on. They're going to try to have their own currency. But the BRIC countries, they're so bad, in such bad shape. They cannot have any trustworthy currency.
Bert, if the fear is for you is not the, sudden end of the dollar, if I had to ask you the biggest pockets of concern when it comes to, the economy, what would you say they are for you?
For the economy, it's just you cannot get loans. See, that's what one of the problems is right now. If you're a developer, you cannot get a loan. Okay, you can't get the initial construction financing, and then because you cannot get the takeout financing. Takeout financing is given by banks when the building is completed. So They can't get the construction to finance the construction. They can't get the takeout financing. And if you have no credit expansion, then everything goes to hell. Pardon the expression. And that's why what is ahead is going to be pretty bad for people who are not prepared. But bear markets can be so profitable. You know, in 1978, for example, there was a high inflation period. We said the U.S. Treasury bonds will lose between 40 to 50% of the value. Now, I was asked to have a presentation at the board of directors of larger entities and so on. They were loaded up to the gill with U.S. Treasury bonds. And I said that, and they thought I came from Mars. Treasury bonds could never go down 40 to 50%. Well, they went down 44%. So I was right. But then came the other side of the coin a few years later, and that was 1982. We gave an opportunity of a lifetime bicycle for bonds. Is that this is it? Bonds are going to have huge rallies, and we even recommended zero bonds, which have the coupon clipped from it, and it's like a leveraged T-bond. And we wrote it would go up about 10-fold, which is quite a bit. Actually, over the next 40 years, they went up 40-fold. Can you imagine the gains on that? Simple trade. You buy it, you can go play golf every day. Don't have to worry about it. You don't have to watch your computer or financial TV. It was very simple. We're going to have an opportunity like that again someday, but it's going to be more volatile this time.
Just to dig a little deeper on your point there, Bert, when you say preparing for this bear market, do you feel it's comparable to another bear market that you lived through, or it's going to be the mother of bear markets? I mean, where is it in terms of the volatility and how bad things could get?
We do a lot of cycle work, short-term cycles and long-term cycles. The biggest long-term cycle study we ever made, that was in 1980. Gold had hit a high of about $800, and we got a sell signal start going down, but it went through 694. We said, that's it. We're now in a gold bear market. And our cycle study which went back 200 years in the U.S. and another 200 years in gold trading in England. And we found this cycle that was pretty dependable for a 20-year bear market, 20 years. And we said it's going to be a 20-year bear market, and gold will probably go down to $300. And it actually went lower. And so from 694 to 300, we're selling short. We sold all of our call options on our mining stocks and started buying put options and so on. So it was very, very profitable. But nobody really wanted to believe that gold would go into a 20-year bear market because everybody's looking for $3,000 gold. They said, no, the technical shows the opposite. Okay, so that's where we were. Well, but the most interesting part was the cycle study showed that bear market 20 years would be followed by a 30-year bull market. And I even wrote at that time that I have no idea what would cause a 30-year bull market in gold. Well, now we know infinite money creation. Now we know. So for that 30 years, so year 2000 was the exact low, 20 years after 1980. And the cycles are usually not that accurate. They will shift to the right or to the left. But this one was right on the button. So if the bull market now is also correct, it should go to 2030.
So for you, we're in a full-fledged bull market for gold?
Yes, there's a bull market, and we're in a full-fledged depressionary cycle. And I wrote that in the 2020 when COVID had started. And, that was February 2020. Everybody in our business gives the forecast for the decade at the beginning of a new decade. So I said, oh, okay, fine. We're going to have a decade like the Depression. Just read up on the 1930s Depression, and you will probably be pretty close to what we're going to have this decade. High volatility, market crashes, wars, turmoil, big droughts everywhere. It's really interesting. The climate has the same type of cycles. And you say, what does the climate have to do with the economy? Well, they are related, you know. So there are many things that, like a turmoil, riots in the streets, they all happen every 90 years, And so these are cycles that, driven by human emotions. Everything in this world is driven by human emotions, the original source. And
In the
that is so
Wellington,
important to realize.
in the Wellington letter, you also warn of, or your fear of a bird flu. Talk to me a little bit
Yes.
about.
Oh, yeah. Well, that's going to be more organized by certain interests in our economic system. The healthcare industry is now no longer about helping people get well. It's helping the big pharma make a lot of money. So that's what's like, for example, the COVID vax made Pfizer and Moderna over $200 billion. The CEOs became multi-billionaires, and when it came out, they said it's based on mRNA. I said, a vaccine can never be based on mRNA, because I knew mRNA for over 20 years. Medicine is kind of my hobby. And I said, no way, there's nothing I've ever read would qualify this to be a vaccine. And it wasn't. It didn't fit the definition of a vaccine. So what did the FDA do? They changed the definition, the official definition of a vaccine. They had to change the definition to be able to call it a vaccine. And we warned people, said, don't take that vaccine. It's going to be totally ineffective, and it's going to be very dangerous because nobody knows the long-term effects. Now we know the long-term effects. They're the top scientists, virologists in the world. So they have now said this spike protein stays in your body forever and continues to destroy your organs for a long, long time. And now we see they have turbo cancers. Cancers develop, and within 3 months, they've grown faster than anything ever seen. And you cannot even try to cure it in that short of a time. Where a good friend just died from brain tumor, glioblastoma. Glioblastoma, there's a lot of good evidence is caused by that COVID vaccine. I have another friend, he went blind. Blindness is also caused. So these are all things, but you're not allowed to talk about that because, oh, wow, you're a conspiracist. Yeah. When they use that word that was invented originally by the CIA for the JFK assassination, oh, we got to make these people look like kooks. We'll call them conspiracists, So, but now it's turned out that every conspiracist theory, just about, has been proven correct with time. So it's kind of interesting.
Bert, let me ask you, do you anticipate any change in direction in the economy post-election? Will it matter who wins?
Yes, I think it will matter in regard to velocity of the change. If Trump wins, he's a businessman. And I've always said, in top political positions, we should have a law, actually, that says no professional politician can be president, for example. You got to have some experience in the private sector. Like Biden, he was for 50 years, he was in Washington, dying at the trough of the taxpayer. We should not have a person like that being the leader of a country, And so I think that having a businessman president is preferable, definitely. The other side, if they win, well, then it's just going to hurry up that depressionary scenarios. Everything is going to go to, where. Very, very fast. So, I mean, the policy, you cannot have price controls. You cannot even have a person who's ever thought that price controls were good because that person doesn't have a brain. I mean, it's just so ridiculous, And I'm a person, I'm not political. I never have been. I always said, forget politics. The markets are much bigger than politics. Well, you can no longer say that.
Bert, let me ask you, well, actually, what did you make of Trump's comments that he feels the president should have some say in what the Fed does?
Yes, because the president has to try to set economic policy. So if the Federal Reserve does something that totally destroys what the president is trying to do, that's not good. Who gets the blame? I agree with that 100%. I always thought this independent Fed is, by the way, it's a fiction. The Fed is not independent. I mean, they have a meeting, several times a month in the White House.
Bert, talking about housing, what is one to do if they're looking to buy a house? Is now the time or no way?
If you need to borrow money, I would not do it. And I'm just speaking, for myself. Okay, everybody has different circumstances, but I would not borrow in order to buy. I would not. And that if you take a look at prices of homes right now, the high-priced homes, the luxury homes, they're still rising to new record highs. The part of the market that is going into the dumpster, down 12%, I think it was over the last year, is the less expensive homes, where people need to get a mortgage to buy the home. So that tells you demand is going to be in the luxury home area, but that's, really have to wonder. This is really the first time that we've gone into a deep recession, if indeed my forecast on that is correct, where there has been a shortage of houses. Supposedly there's a shortage of about 5 million homes nationwide. Of course, we have the corporate home speculators like Invitation Homes and so on. They buy thousands of houses to rent them out. That's going to be a problem.
Bert, as we wrap here, always enjoy having you on and your thoughts. Just final thoughts for viewers watching here, Bert. Anything you'd like them to know?
Thoughts: do not use options. People I talk to, they say, "Oh yeah, I got call option." This call, I always hear call options, and then if I say there's going to be a bear market, they're already getting ready to buy put options. And I say, first of all, wait until it starts. Don't anticipate it. Wait until it starts. If you're a week or two late, that's fine. Because this bear market is going to last longer than a few months. It's going to be some pretty big. And that yen carry trade, I don't think is over yet, because what they did with the yen carry trade was also done with other currencies. So, but the opportunities in the bear market are so great. You can just buy the U.S. Treasury ETF. It's called TLT. And so here you have a diversified portfolio, and it's the safest instrument. That and differentiate between T-bonds and T-bills. T-bills are short-term, 30 days, 60 days, or 90 days usually, okay? So they are the safest monetary instrument in the world. People put their money in money market funds that invest in CDs, maybe because they get a tenth of a percent higher. No, don't do that. CDs are not safe in a big financial situation, event. So you don't want to do that. You can also, if you're an experienced investor, you can sell short and make a lot of money. But don't be greedy. I think that's the message. Don't be, we were saying that in July, the whole July said, we're going to have something negative happening second half of July. No leverage. Don't use leverage, no call options, etc. And reduce exposure. So then we had the crash. Yeah, well, the bulls didn't follow that advice, apparently, although the people who did follow our advice, they were very happy afterwards. And we said, now we're going to have big rally. It's going to attract the last bulls that people are basically taught to ignore the negatives. Oh, the markets always come back. Oh, really? Like the last one, the financial crisis in 2008. The NASDAQ, I think, went down about 80%. Well, when something goes down 80%, you want to hold it. It has to go up 500% for you just to break even. People don't seem to make that calculation. You know, I mean, I was taught to do all the math in my head. You know, that's how my schooling was. Everything, and driving on vacation, you know, all day long, sitting in a car. My my father would always do mental math exercise. Okay, you're 15 divided by 2 times 1,020, and so on and so on. And you know, it's so good for the brain, you know, to do all this stuff in your head.
Absolutely.
Who
And
could calculate in their heads nowadays?
you know what? I love that you bring that up because I always, look at my father, my mom, my aunt, whoever's part of that generation, their calculation skills in their head, and they're always yelling at us like, "You guys can't add, you guys can't do multiplication fast enough." And I really truly believe we need to get back to that skill, Bert.
Yes, throw the calculators away, you know.
Uh,
I mean, but when people pull out a calculator to add 2, 3 digit numbers, you know, I said, "What? You can't do this in your head? No, they
Or even if
can't."
you're at the register and they have to pull out a
Yeah,
calculator if you gave them, a certain change and they don't know the change back. So it's just a sad state of affairs.
it is. Yeah, but you know, we have to work at it. You know, everything worthwhile in life takes work. You know, and at my age, I won't tell you what my age is. It used to be 39, but I think I got a little older. And you know, I just still work 10, 12 hours a day, you know, but I don't consider it work. It is a pleasure. It's a challenge. It's a daily challenge to figure out what's going to happen next. So it's really interesting, you know, but figuring out the vaccine. We got that right on the button. It said it's not going to be effective. And we even told people what to do instead. What are the natural supplements, very inexpensive, that you should be taking? That was before COVID was even called COVID. We said, take quercetin, take vitamin D3, take it with zinc. You got to take, it was a cocktail of about 5 different inexpensive supplements. And they're still recommended by knowledgeable doctors. If your doctor doesn't know what these things are, better find a new doctor. They're hard to find. Knowledgeable doctors are hard to find.
And
Yeah.
getting sun, right? Isn't that a
Yes.
good form of
Oh,
vitamin D, Bert?
I'm so glad you brought that up. At that time, it said, you know, in Europe at the time, I know that because I was born in Germany, and I had an uncle. He had tuberculosis, and a lot of people had tuberculosis at the time. It was basically like a death sentence. There was no cure. There was no antibiotic on the market at that time. So the only thing you could do is go to a sanitarium in Switzerland on the top of a mountain, and they would lie out there on the veranda with a blanket on them and soak up the sun for about 5 hours a day. You know, and that was the cure. And he got cured with sunlight, UV. So when these idiot politicians start saying, even in Hawaii, you're not allowed to go to the beach, you know, and they close the beaches. I said, also in California, incredible. They closed the beach. I said, my God, it's sunlight. You need the beach, even ocean air with the iodine in it. You
Bert,
need that.
I have to share this personal story with you because, as you know, I was vacationing in Italy
Yeah.
with my kids, my husband, and maybe we've been brainwashed a bit too much by North American culture in the sense, we're at the seaside, and all these Italian kids running around, no t-shirt, right? Beautiful, dark, they're tan, completely no sun hat, and here are my sons. I have them in their, wide brim, waterproof hat, their rash guard, their blue lizard sunscreen. And I looked to my husband, I said, maybe we just have it wrong in North America because I'm looking at the, the lifespan in Italy, one of the longest living population in the world, one of the healthiest populations. So I thought that was just an interesting, and I turned to him, I said, maybe we need to tone it down a bit. And
Quite a bit.
yeah.
We should stop listening to all these medical experts. Just because they went to medical schools doesn't mean that they have a brain. You know, so I'm very outspoken about my disrespect for many people in the medical profession. So now you have a good test. All you have to do, ask the doctor, did you recommend the COVID vax to your patients? Did you recommend that they should take it? If he says yes, then walk out the door, say, have a nice day, I'm leaving. And then you go find another one, until you find someone who said, no, I never believed in getting that vaccine. Then you have a smart doctor who actually reads. Most doctors, I had a tennis partner who was a doctor at Cedars-Sinai in Los Angeles and so on, and a professor at UCLA. And he did not believe in any of that stuff. He was just incredible how he wanted the vaccine. Oh, yeah, you got to get the vaccine, etc.
Bert,
And now the people at the vaccine, they're getting very ill.
Bert, I feel my Canadian audience watching wants to tell you, Bert, we can't even find one doctor. So we're lucky if we even, have one family doctor.
That's true. That's why, you have to do it yourself. There's a great health newsletters. I've been reading the Blaylock letter, Russell Blaylock. He's a neurosurgeon. He's retired, and he's been writing this thing for, I don't know, probably 30 or 40 years. I've been reading it, subscribing to it for about 30 years. He is so intelligent. He's a brain surgeon who finally discovered how natural supplements can do much more than prescriptions. And he writes about it every month. Get it. Blaylock newsletter. It's on Newsmax.
Well, people should also get the Wellington letter. How's that?
Well, that's a good idea. Then that is a good idea because
not
we give you so much more.
Just
what?
From my heart, not sponsored.
Thank you. Thank you. That's right. Yeah.
So Bert, thank you always, Bert Dohmen, and we'll see you soon, and we'll see all of you soon. Keep watching the Daniela Cambone show here on ITM Trading and sign up, danielacambone.com, to stay on top of it all. See you soon.
All right. Thank you very much for the opportunity. All right.
Thank
bye.
you, Bert.